Great. I thought it'd be very just interesting to start off by getting a sense of what's the background of the audience here. How many entrepreneurs do we have here? Maybe a quick show of hands. Entrepreneurs. Okay, excellent. We have some presence here. Financial services executives? All right, we have quite a few from financial services. Consultants and advisors? Okay, good, good. Healthy mix that provides us with some context as to how to tailor our discussion here. But just to start off, very excited to be moderating this event, this panel, and we actually have a very unique profile of panelists here today, representatives from each of the different ecosystems involved in payments, and each of whom should have a very unique view on the evolution of digital payments industry in India. We have a representative from the card networks, Visa. We have a representative from the banks. We have someone from Yes Bank, a representative of regulators, someone from the RBI, an individual who's a managing director at a venture firm, and of course we also have a representative from a mobile wallet company to give you a sense of some of the newer interfaces that are emerging in the payments industry. So it'd be really great to get everybody's points of view, and we'll probably have about 45 minutes of questions from my end, and then we'll try to open the floor to everyone else. So why don't I just start off with a very basic question here, which is, how do each of you view the opportunity for digital payments in India? In other words, why are we all here at this conference, and why are we interested in this sector? So actually, Vijay, I thought we'd start off with you, just for you to give us a sense on how the government has viewed digital payments and what has been the driver for all of the innovations we've been seeing on the government side.
So good morning, friends. Privileged to be here. So in one word, the opportunity which I say is huge. So in a country of 1 billion people, obviously the statistics offer a great opportunity itself in terms of analyticals. But let me just take you back to a period in 2009 where the regulator decided that we need to have a look at how digital payment space is going to shape up. And we set up a core banking solution which actually services the government departments, where we were having an average of a few thousand transactions per day. We set up a system to handle more than 10 million transactions. So we saw that opportunity of onboarding the government onto the digital payment platform as early as 2009. Now, subsequently in 2011, when I became the head of the payment systems department, I called a meeting of all the stakeholders and talked to them about their ability to handle 1 billion transactions per day. So the idea was to shock them into thinking that that's where you are headed and that's what you need to improvise your systems. Within the Reserve Bank itself, two platforms which we were operating were the RTGS system and the NEFT systems. Both these systems, the older systems, were removed, and we brought in brand new systems, RTGS on a ISO 20022 platform, upgraded the NEFT to handle more than 10 million transactions per day, and that's how the volume started showing. In 2014, we actually conducted an international seminar, which was titled Serving 1 Billion People. So clearly, from the regulatory perspective, we saw the great opportunity. We saw that this is where we are headed, and that's how we have been planning all these years. Onboarding government has been one of our bigger successes. As you know, when we brought them into the NEFT platform, within 1 month of state governments and central governments onboarding, we were able to touch 10% of national NEFT from state governments. So that's a huge platform which we have seen, which is growing. So the challenges, of course, we have clearly identified in our vision statement when we took it out in 2012-15, was the need for a wider acceptance infrastructure. And of course, financial literacy is the second one. So these are the two major challenges, and we continue to struggle with these two even today.
And Vijay, if you could provide us with some context of what were the reasons, even back in 2009, what were the problems you were trying to solve that compelled the government to go down this road?
So if you see, just to give you an example, I was in West Bengal and the government used to pay salaries in cash. So consider that 600 pay and accounts offices operate in just Calcutta city alone to pay salaries to various state government employees. Each pay and accounts office sends a team of 5 people and a vehicle to collect the cash for their staff. So you imagine how many vehicles used to come to Reserve Bank and block that road just to pick up the salary. When we switched them on to the ECS platform, immediately the staffing requirement and the need for vehicles dropped by 96%. So that actually gave us the impetus to see that the government is the one which really needs to be onboarded first, and of course the private sector is going to follow, because they already understood the benefits of electronic payments and the cost savings it would be able to incur for their businesses.
That's a tremendous example. And to your point about the government leading the way and then making a way for the private sector, that sort of takes us to the banks. And maybe, Asit, you could share your own views on how the banks view the digital payments opportunity.
So we are very excited about the opportunity that comes in, particularly with India's stack. And I think there's a lot of opportunity that comes in. So for example, with UPI, roughly about 30-35% of that volume of UPI is being processed through Yes Bank. So we're very bullish on that. From a client's perspective, we also see an opportunity to partner with them to digitally transform their lives, digitally transform their entire supply chain. With MSME clients, we're looking at as an opportunity to see how we can jointly create white label solutions to help them, for example, process large bulk payment transactions, to help them process GST, to create an ecosystem whereby they can process GST transactions. The corporates at their end have all the solutions in place, but ultimately GST will not go through if dealers, distributors, that leg isn't taken care of. So we have white label solutions which enable, we partner with fintech companies to enable white label GST solutions, which will then, the minute the challan is made, it will, and everything else from a processing perspective is done, it will trigger an API call and the payment will get efficiently handled. As an organization philosophy, we at Yes Bank have strongly believed in art, alliances, relationships, and technology. So we've partnered with a lot of technology companies to help create ecosystems which benefit both. Because there's a role for us, there's a role for fintechs. Let's see how we can partner with each other. So for example, with some supply chain financing, on using blockchain as a technology, we partnered at one stage with IBM and then with also a smaller fintech company to look at developing the blockchain as well as onboarding the client.
And Asit, is this, what's driving all of this? Is this just the banks basically saying we have to reduce costs, we have to reduce friction? Or is there consumer pull? Is there SME pull? There's real demand pool from your customers who are basically saying, look, we want to transact electronically, or a combination of both?
So it's a combination of multiple things. As a bank, we realize that we can't do everything. We can't develop every technology that exists, every new technology. Fintechs are agile. They have a lot of good solutions, so we partner with them to develop some technologies jointly. We help them reach out to clients. And I give an example using blockchain. We've also used Stasis, which is another solution to use feature phones to make payments. And even in API banking, we've used fintech startups. We also have a program called Yes Head Startup, where we partner with startups. And pretty much, if you are a startup, there's a good chance that you would have partnered with a Yes Bank client where we will give you full solutions from an early stage, including helping you with the ERPs and API banking related. solutions. We also have something called a fintech accelerator, which helps us, again, develop new fintech companies. But the reason behind that, Nitin, principally is that let's partner. We can reach out to a larger ecosystem.
Sure.
We can reach out to giving our clients a better experience. The thing I'm always most bullish about is improving and enhancing the client experience. Because if the client gets a far superior experience, there is a greater likelihood he will, increase his share of wallet, he'll deepen his relationship, and he'll walk away with a happy experience. Yeah. So in many ways, we say we are a technology company in the primary business of banking.
No? Excellent. And Ram, you are sort of India and Southeast Asia head of one of the innovators of the electronic payments industry globally. How does Visa and how do the card networks in general view the opportunity in India?
Thanks, Nitin. Morning, everyone. In terms of your first question as regards the opportunity, just to sort of dimension it, on the personal consumption expenditure side, if you say about 60% of India's GDP is personal consumption expenditure, quantified, that's $1 trillion opportunity, $1 trillion. Yeah. Of which high single digit is electronified, which is 90+% is still dealing in cash. That, according to our research, makes India the single largest cash displacement opportunity on the planet, right? On the CCE, the corporate consumption expenditure, it's about 5 times that. It's a $5 trillion opportunity. Again, with very, very low, digitization done there, notwithstanding what Vijay said in terms of what the government is doing, there's a bunch more to be done. So the opportunity certainly is enthralling. It's a significant opportunity for us. And if you couple that with the fact that the government, stakeholders, the RBI is increasingly realizing that cash is not free, and I think Smita alluded to it in her opening remarks, and there's a cost of cash. And we estimate the cost of cash to be about 1.6% of the GDP. There's about 19% of the GDP, which is what is euphemistically referred to as the shadow economy. And the foregone taxes resulting from that is about 3.2% of the GDP, right? So there's a compelling argument from householders, merchants, governments, institutions to be made to digitize and to get sort of digital payment services on the front burner. And we certainly think, notwithstanding the myriad challenges that there are, behavioral, infrastructural, it could go on and on and on, the road to leapfrogging in terms of multi-bagger opportunity from the stakeholders' perspective ought not to be underestimated.
And Ram, how do you think about the consumer opportunity versus the corporate opportunity? You mentioned the corporate opportunity could be 5 times as large than the consumer opportunity in terms of displacing cash. Specifically, how do the card networks, or how does Visa get involved in the corporate opportunity? I mean, I think all of us understand how you get involved in the consumer opportunity, but how do you think about
that's not so intuitive, is it? I mean, all of us, when we speak about payments, I've often seen that we get drawn into this sort of saying, how do we solve for payment at the 400,000th village and the Kirana shop there? And that somehow seems to be the straw person for solving for payments. Whereas, if you see the sort of, even in the $1 trillion that I mentioned, just citizen to government payments alone is about $175 billion, right? Toll, transit, transport is about $150 to $160 billion. So we need to solve for everyday use cases on the consumer side. On the corporate side, there are certainly big opportunities. The United Kingdom government, for example, by moving government procurement and e-auctions completely to digital, saves about £1 billion a year right now, right? The US government, all the 350 departments in the US government, including the Department of Defense, have moved to fully electronic in terms of procurement, and that, if I remember my numbers right, is about $5 billion in terms of cost saving. So we see opportunities straddling both the consumer and the corporate side of the ecosystem, and certainly technologies like blockchain will serve to ignite the opportunities on the corporate side.
And Asit, you've mentioned as well that there are a number of specific initiatives that Yes Bank is pursuing on the corporate side, or the B2B2C side is one of the things that you had mentioned to me earlier.
Yeah, absolutely, totally. I totally agree with what Ram mentioned. We traditionally, when we look at post-demonetization, our heavy focus has been at the merchant level. So how do we digitize that process? And there has been POS and QR codes and many others, UPI and other solutions. But there's, taking a simple example, explaining B2B2C, there is a retailer, there's also a distributor, and there is a corporate. So you digitize the retailer's process, then you digitize the transfer of money from the retailer through to the distributor, and then you digitize that from the distributor to the corporate. So today, a lot of banks and a lot of others have focused on just the almost the the retailer perspective. Then there's also the government. The government has done a lot of good work in DBT. Also, a lot of their subsidy payments are going through systems like PFMS. So there's a lot of automation that's happening. But just imagine a pharma situation where you have stockists and you have CNF agents and you have corporates. So you can digitize cash using cash machines to collect the cash of the stockists. Then you can use NACH and other electronic products to transfer it to the CNF agent. Then you can further digitize it to transfer the money to the corporate. So, and then, through some of these, you can use technologies like blockchain and other technologies.
Right.
Also, API is another big technology we've used to digitize the payments leg right from the ERP without actually going into net banking and making payments. So you just digitize that process as well. So there's a lot done, and there's a lot more that needs to be done.
Absolutely. Now, Vineet, you, as a representative of the mobile wallet industry, I think you guys have a very unique point of view where you saw not just an opportunity within electronic payments or digital payments, but specifically an opportunity with respect to mobile app-driven consumer payments, and we'll talk about corporate payments from a MobiQuick perspective as well. But let's just start off by saying, by asking the question of, how did you view the mobile wallet opportunity in light of the fact that there were other ecosystem participants in India providing digital payments solutions to customers?
Thanks. So look, just to set the context, payments was a very boring back-end kind of a business traditionally, multi-decades old. And to set the context again, now, why we are speaking here today, this is a conference focused only on payments. Why is it happening? So I think the story started around, 12, 13 years back, where the telecom revolution began in India. And we have leapfrogged the Western countries by maybe a couple of decades, from transitioning from feature phones to smartphones, 2G, 3G, 4G, maybe better connectivity, etc., and so on. And then unique thing happened, I think, several years ago when some folks thought of the idea of a wallet, and they thought that a front-end product targeting the consumers with better use case, I think very simple, a no-brainer kind of a product, and it gained traction. And the huge impact and force multiplier came with demonetization, where I think everything took off, and I think woke up the entire industry and ecosystem to that this is a huge opportunity on the front-end side, especially in India. And maybe India is a unique kind of a country on the consumer side and as well as on the merchant side, where front-end becomes very important. So what is the kind of front-end jacket that you're wearing in terms of use case, simplicity, what kind of problems you are solving for the consumer case, for the consumers. So look, we were 35 million users pre-demonetization. 6 months, I think 5 months, we have grown from 35 million to 55 million. That kind of push. Transactions grew 1,000%. Mobile app download grew 20x. Okay, so, and another thing that we did, and which startups typically do in any kind of industry which they innovate in or disrupt in, was that in 6 months, we have a merchant base of around 1.5 million merchants. We process around 2 million transactions a day, whereas the traditional industry incumbents took about maybe 1.5 decades to build this kind of a merchant base. So I think the new opportunity in India, why folks like me work in the payments industry today, is because it's a huge front-end consumer internet kind of an opportunity. I don't know whether this kind of an opportunity is there in any other parts of the globe or not. But India, yes, the kind of country we are, the kind of spend habits we have, the kind of use case, the traction that the smartphone has, the humongous app downloads that are increasing on a month-to-month basis, I think, yes, wallets will always be relevant. So I think we are in a business where everybody wants to kill our business. Okay, that's what Bipin, our CEO, says, that telecom companies have wallets, all banks have wallets, and everybody thought that, okay, because we are very, very strong incumbents, and we will be able to ride roughshod over these guys. But I think we have shown that, yes, this is a platform kind of a business. This is a business where user experience matters the most. So I think, yes, we'll be relevant. We'll fight hard.
Vijay, what's your view?
Let me just share this with you. One of the most compelling reasons for pushing digital payments and also allowing mobile wallets companies to come into play was the need to serve the rural people, the last mile linkages which we were trying to establish. And I think even today, if you see the government's push, it's two-edged. The government's push is two-edged. One is provide digital platforms to the rich and the haves, where you can probably collect better taxes. And at the other end is also to serve the poor people by providing them financial services and giving them an opportunity to rise in the country's economic growth. So that's one of the compelling reasons I think we should point this out.
Shailesh, I know Sequoia is, of course, an investor in MobiKwik, and the firm has done a great job of identifying new trends and opportunities within digital payments. How do you guys view the opportunity today, given that you have to think about regulators, banks, networks, now large players like MobiKwik? Where do you see opportunities, and what kind of advice would you give entrepreneurs with respect to where they should be focusing their energies on new areas within payment?
So thanks for having me here, guys. Like many of our panelists here have talked about, this is a large opportunity. And India is just in a super early stage of evolution here. We've been investors in payments companies in India for pretty much our entire existence, so about 10, 11 years. And it's probably been one of the most active areas of investment, because it's a very obvious bet that all forms of payments will grow given how low penetration is. But yeah, since demonetization, it's been perhaps one of the most unstable industries that we invest in. The regulatory change, the types of competitors, the amount of capital that some people are able to access, the nimbleness of banks in many ways, have all been sort of very new things that have occurred over recent months. I think the main question we think about here is that when does that stabilize, and what does the world look like, and how to best prepare as a company for that. And I think it would be very helpful for the government to help us give us some clarity on what their actual plans are. Things like UPI and BHIM are initiatives where it's unclear whether the government wants to be a platform or a principal or wants to do something, set an example and then leave. So that uncertainty and the uncertainty around what are the business models around some of these new forms of platforms that they're creating is one of the things that I think would help companies a tremendous amount. To give Visa, Master, Amex a lot of credit, the business model for everybody in the ecosystem around those networks is very, very clear. And some of the back-end systems that RBI provides, RTGS, NEFT, the efficiencies, as Vijay talked about, are so significant that the ROI on that is very obvious. But some of these newer last-mile, consumer payment systems like UPI, the business model or what the model is to actually make sense for people to make money off it is at least on our mind, still very early.
Speaking of uncertainties, I thought we would talk a little bit about demonetization and what has been the impact of demonetization on digital payments, both positive as well as, still not very clear. And from what I, as a layperson, read, I've heard of that there's been a tremendous spike, but then there's been a little bit of pullback. So I'd be very curious to hear from the banks, from the card networks, from the mobile wallet companies, what have you seen with respect to consumer behavior, business behavior, pre and post demonetization? And then we'll ask Vijay, what was the government's own view on how demonetization would further the drive towards digital payments? So let's start off with what experience you guys have seen.
So I think maybe just before that, let's look at pre-demonetization as well. The government was taking some strong measures. Jan Dhan was a really strong measure. Aadhaar was another very strong measure. We have over 1 billion people who have an Aadhaar card, of which roughly 340 million have bank accounts. So all the steps were very strong that were taken pre-demonetization. And then demonetization came along and really acted as a very, very strong fillip. So we saw that pretty much everyone, almost cash disappeared from the economy. It was hard to get hold of. So we had people really, from even, a kirana store person to a fruit vegetable vendor, all using a digital app of some form to actually transfer money. Retailers who were huge users of cash, a lot of cash used to go into the economy, they roughly saw almost 90% of their volumes, which were roughly earlier for 55. So 55 went to 90% using digital solutions. That same number now, I believe, is about 70-odd%. So it's dropped because India still has a little bit of a habit of using cash. You have a habit of digging into your pocket to do cash. The government came up with strong measures, pricing reductions on rates, utilities, others, rates came down on MDRs, etc. UPI was a very, very strong measure which had started earlier but took a fillip. UPI, Aadhaar-enabled payments that took place. So a lot of strong measures happened. The government, even pre and post, most of its payments that it makes on subsidies, etc., as well as where it supports causes, goes through digital channels. So that took place. So it was very, very positive, and because of habit of cash, we dropped back. But challenges are really around behavior. I still don't see enough corporate use cases around UPI. So it's UPI, I think roughly 90% is P2P. So we would love to see a lot more corporate use cases come in. We're working on many. And there's still a lot of corporate side, there's still a lot of traditional way of handling payments. Just trade finance is a classic case. So blockchain and other solutions will help there.
And Ram, what have been your experiences around sort of October 2016 versus December 2016 versus March 2017 in terms of the acceleration of digital payments and any pullback, or has there been, and what kind of change in behavior have you seen? And why or why not has there been what was expected?
Yeah, so we've seen this pullback stuff, covered in the papers a couple of times. But just to sort of set the context, December obviously was the peak. Mm-hmm. To Asid's point, I mean, there was no alternative. If you see the latest numbers, and Vijay, correct me if I'm wrong, currency percentage GDP used to be about 13%. It's about 8.5%, 9% in that ballpark today, mm-hmm. which means that the entire repertoire of currency, which was erstwhile there pre-November, has not, in fact, been replenished in the open market, right? Without getting into the actual numbers, the RBI data suggests it's about 150% or so of a very, very large base that peaked in December of 2016 that number's come down, and I use that in inverted quotes, to about 80, 90%. And to Sailesh's point, I mean, it's anybody's guess as to what the stabilization new normal will be, but one hopes that it doesn't go up and come down like that. And if it sort of stabilizes at the sort of March, April type levels we've seen, that's great. On the debit card side, India has 800 million debit cards, right? And Nitin, you made the point that this is a system where everybody knows their roles and responsibilities. The consumer certainly has protection in terms of chargeback rights and fraud protection and security protection and all the sorts of things. It's fair to say we've seen about 30, 40 million new debit card customers who have never used their debit cards outside an ATM start transacting at point of sale. Vineet made the point about before November there were 1.5 million merchant point of sale terminals. And we've added 1 million point of sale terminals as an industry in 5 months. So today we are at 2.5 million terminals. Visa had launched the QR solution, M-Visa, about 18 months ago, I think. And then with a little bit of gentle nudging from the RBI and the sort of ministry, we got together with the other networks, with NPCI, with MasterCard, et cetera, to launch Bharat QR. And that's a global first. It's a global, interoperable, first-time merchant-presented QR solution. There are today about 30 million customers who have access to the Bharat QR app. And from practically zero, we have about 250,000 merchants who accept QR in terms of payments. And I'm a firm believer in QR, not because of it was invented by Visa, not because of that reason, but because it can theoretically solve for the cost of the point-of-sale machine, which costs 10 to 15,000 rupees, and a piece of cardboard with a QR code costs zip. And to Asid's point, you can see how banks can sort of partner with fintech companies to just push out, and then the merchant who's a current account holder does eKYC automatically, and then can print out a QR code from his or her desktop or mobile and just kind of stick it in there and be ready to go in terms of accepting payments. So I think a bunch has happened, but the important takeout for me is that we are seeing a slow but discernible shift in consumer behavior. And that perhaps outweighs all of the other secular shifts that you're seeing. Because let me give you just one example, and then I'll hand off to somebody else. Fuel is a category. There are 60,000 retail fuel pumps in India. Of all the retail fuel transactions that you and me and everybody else does, about 7% was done digitally. 93% was done by cash. That number has trebled
Wow.
in 5 months' time, and we see no reason for that to come back, because once consumers see you ride in your mobile or car or whatever it is, and you pull out your card and you punch in a number and you sort of do it, you figure out, hey, this is not so bad.
Yeah.
Right? I don't have to go to the ATM and withdraw the cash and come back here and do whatever it is that I need to do. So strong use cases, I think, are super important in order to get consumers into the habit of using digital payments.
Yeah, I agree with that. And Vineet, it would be curious to, if we could, I know you mentioned some statistics earlier around what has been the pre and post demonetization traction and engagement on mobile wallets such as MobiKwik, but it would be helpful if you were to just delve one level deeper and tell us a little bit about, okay, what are consumers actually doing on the platform, and where do you see real changes in behavior taking place?
The reality is that the growth has tapered off. The reality is that the growth has tapered off.
Sure.
But still, we had a humble base, so we are still growing. Mm-hmm. But yes, the numbers are, you can say, in a range of 15 to 20% month-on-month growth now. Okay. What has actually changed is that the average value of transaction has tripled.
Okay.
Okay. So I think that is a huge difference in that sense.
Is that a reflection of what people are actually doing on the platform, as opposed to just doing prepaid mobile top-ups? They're doing X, Y, and Z. In which
so
case,
actually, they were nudged and pushed to start using the mobile wallet, especially per se, for different kinds of transactions. And since the acceptability increased humongously, there was no resistance on the merchant side as such. Okay, I think people started using it for more number of use cases than they were traditionally using it. Otherwise, they were using it for use cases which were typically 500 rupees and below, those kind of transactions. Mm-hmm. Okay, and typically, I think one of the biggest things that I think maybe mobile wallets have done in India is bridge the trust deficit. So typically the Indian use case behavior, at least my age, is that we don't use our credit debit cards for less than 1,000 rupee kind of transactions.
Sure.
So if you go and buy vegetables or whatever, eat a snack or go to a McDonald's and the bill is $50, $100, $200, traditionally people like me also used to pay cash. Now this is a slightly different kind of a use case where we don't mind paying through a wallet. I don't know why is it.
Right.
Okay, because when we travel abroad, we use it, the plastic only for each and every transaction, but maybe typical of India. So I have not been able to fathom any reason why we behave like this in India as such, the aversion to smaller transactions in using plastic. Okay. So the numbers have tapered off a bit, but still the numbers are very, very high. The key insight here is that usage, active users, they have increased. Okay, we are at lifetime high numbers on active users and the average value of transaction.
And similar to how Ram provided us with this example of what's happening at petrol pumps, if you were to provide some narratives around consumer behavior on the wallet over and above prepaid top-up, what would some of those narratives be?
So look, we've gone from 0 to 10,000 transactions a day on petrol pumps.
Sure.
Okay. We've gone 0 to around, what should I say? We add around 8,500 merchants every day. And our current active transacting merchant is around 9.5%. Okay, so we are a number 2 player. We work harder. Our ratios are slightly better in that sense. So I think that is a good ratio to get. So if you acquire 10,000 merchants a day, 1,000 start transacting immediately.
Sure.
Okay, and then we nudge them through various ways and means to make them transact using our platform. Other kind of numbers, we were primarily a small, sweet, 150 people online kind of a company. We had a very good, huge footprint on the online side and the organized retail side.
Okay.
So what we have done after demonetization is build the footprint and a brand for ourselves on the offline retail merchant side, unorganized retail side. So that's where we were totally not present. So oil and gas, petrol pump.
And I know a number of banks are also setting up mobile wallets as well. What has been the bank's experience for this kind of form factor?
I think mobile wallets for us, they've really taken off in a big way. So the client experience is great. You couple it up with UPI and other things.
Yeah.
It just is a flawless, seamless experience. But the point I wanted to make, which I couldn't make earlier, is one of the big changes happened post demonetization.
Okay.
Almost every client that you meet is talking digital. So the discussion is all around how do I digitize my landscape? How do I look at digitizing my corporate landscape as well? How do I digitize trade finance transactions, which are traditionally, it's the A2 forms and everything is being manually moving. So now you have clients having digital signatures and documents moving digitally. So I envisage a bank in times to come, I envisage Yes Bank as well in times to come, to be traditionally digital, a total digital transaction bank, where over time there won't be any paper moving. So to open an account, you'll use eKYC to open the account, Aadhaar based. You want to open a deposit, you can do it straight using APIs. Or from net banking, you want a loan, you can over time look at ways and mutual consent and digital lockers and other things, documents moving using blockchain and other technologies. So literally, you want to make payments, you have UPI, you have API-based payments, you have other tools, including trade finance. So, I envisage that situation in a not so far away future, where you will have a strong digital transaction bank where paper is rare to be found.
Many of these innovations will be a part of IndiaStack.
Nitin,
yeah.
I'll give you some more stats. Sorry, I missed out on that. So
Just in the interest of time, we'll move on because I want to open the floor for questions as well. My last question for the panel is around IndiaStack. And maybe, Vijay, you could start off by telling us a little bit about what's the motivation behind developing this infrastructure?
Motivation, I won't say that it was a structured, motivated
Of course.
effort. It's developed into one such structure which has happened now. But in essence, from the regulatory perspective, we've just discussed the demonetization and other issues. Obviously, it was not a documented process which we can say this is exactly what we planned and this is what has happened. But taking a broader perspective, the first thing is post demonetizations, the ATM has taken a big hit from its reputation perspective. The anytime banking machine kind of thing which it had has lost its position. Yeah. Similarly, a lot of institutions have taken a reputation hit. So from the regulatory perspective, any payment system provider which is regulated, we would like their systems to be efficient, safe and secure. So even if one system which is like a cash dispensing machine becomes inefficient, it's not a good thing for the banking industry as a whole. But talking of the India stack, just to share the regulatory perspective, we were very much in favor of the Aadhaar business because we felt in the banking industry a lot of fake people have accounts. A lot of people take loans and we are not able to identify that they are the same persons or different persons. So we wanted this Aadhaar authentication process to be put in place. And we in fact conducted a pilot run, which is called now term used as sandbox approach, way back in 2011-12 when we were trying to do a cash out project for the PPIs, for the wallet guys. So taking on that perspective, the stack is now developing into and getting into shape. And that seems to offer a lot of opportunities for the stakeholders which are here today, the financiers, and the tech guys, the fintech companies, and the fin servicing guys. So as just now, as Asit has just explained, the opportunities are phenomenal. And from my perspective, though he's talked about just corporate opportunities and everybody talking about it, from my perspective, the rural poor will be the biggest beneficiaries because earlier to open an account, they needed certain amount of documentation and there was a process followed after which the accounts were actually opened. So the magic of instant opening of an account never took place. Currently, using this India Stack opportunity, which is just eKYC, and the ability of a BC of a bank with a handheld device walking up to a villager and opening his account, standing then and there, and allowing him to deposit money and to remit money at that very moment, that I think is the magic which we were looking for, and this India Stack offers that little opportunity to him. The other thing is, of course, again, as it said, lending to them.
Right.
All these things will take place now.
And Shailesh, you were mentioning earlier about some of the questions that one would still sort of have to sort of resolve with respect to India Stack and what are the motivations and objectives. But if you were to flip this around and say, okay, what are the opportunities that India Stack presents, especially to entrepreneurs or to startups, what would your thoughts be there?
I mean, if I could think of all of them, I'd probably go do some of them. I mean, I think the opportunities are so immense, right? Yeah. You have all these new capabilities that as a small company you could have never accessed before. So being able to move money with very low cost and low friction and are things that are just very unique. Even globally, that's not easy for a startup even in the US to do. I mean, lending, wealth management.
Are there any companies within the Sequoia portfolio that you think will truly take advantage of what you're seeing there?
I'd be surprised if it wasn't a topic at pretty much every company that had something to do with money. Right. And you know, in corporate applications in every company. So yeah, I think it's impacts are stuff that we can't even imagine today.
And Ram, as Visa having built a scalable and secure global digital payments ecosystem, you sort of look at what's being built here in India and with India Stack. What do you believe are some of the areas that the India Stack developers are going to have to focus on to truly create a platform of scale, and how do you think that that coexists with the Visa and MasterCard infrastructure?
So if you parse the sort of India stack components into the logical sort of elements of what they're trying to solve for, authentication is obviously a big deal, right? Which is sort of at the base of the pyramid. And there's no argument about the sort of Aadhaar-enabled authentication services. Although I can't resist the opportunity to tell Vijay that even today to open a credit card or a bank account, you actually need a wet signature. I'm sure RBI will figure it out, but as of today, you still need a wet signature. But theoretically, the opportunity exists for authentication. I'd be worried as to the success rate of those opportunities. Vijay mentioned the rural poor. And on the DBT payments, on Aadhaar authentication, we understand success rates is 70%. Even for a minimum viable product to go into the market, I'd struggle with the 70% success rate. So we need to sort of solve for that. The second and most obvious sort of elephant in the room is around cybersecurity.
Right.
And I worry a little bit about, especially Asit made the point about these sort of opening up the network and APIs and connectivity and developers building off the base of that. And especially off a rail, and whatever the rail is, let's assume it's UPI for the sake of argument. Unless the last mile is as secure as the first mile, consumer confidence can be severely sort of affected. And I kind of worry about that. And the third thing is about whether indeed the digital locker and the digital e-signature type initiatives will lead to more innovations on the lending side of the business. Because at the end of the day, in India, financial services companies make money on the lending side and have so for the last 100 years. Payments is a layer, and deposits is a layer, and low-cost deposits is an input variable, but eventually you make money on lending. And to the extent that the lending pain point is not solved by this, I think the opportunity cannot be realized.
I think one of the best things about India's stack is it creates standardization. So standardization, so you don't need to, banks and others don't need to create IPG solutions and, create their own IPG. It takes time, it takes effort. So it helps create standardization. The other bit is with India Stack, it's paperless, presentless, and that whole ecosystem, be it UPI, be it Aadhaar, be it now BBPS coming in for billers and other things. Those are good tools to help you move money in a convenient manner without really bothering. So who does India Stack? In fact, it impacts millions of our citizens. It impacts a software ecosystem working on financial services, healthcare, etc. You can, create solutions which include even insurance at hospitals and other things. It impacts the government, DBT and other things. Now, the way banks really make money well, lending is important, but equally important to lending is the cross-sell you do through payment products, cash management solutions, trade finance products. So if you sell just one, nobody's done the stats, but that's one of the most important reasons of my job. If you actually sell the whole ecosystem or you cross-sell multiple products, that's where you really make money. Because if you only do lending, and I agree, security is very important to handle. So that's where, API and other solutions that Yes Bank has built, including some of our old solutions around net banking access, where we did biometric access to net banking, and we did, other solutions. So security is paramount.
Sure.
Client has to be comfortable transacting and feel secure as well.
Excellent. Well, we have run out of time, but I thought this was a great panel where we were able to discuss both the long-term opportunities of digital payments, what the experience post-demonetization has been. Ultimately, there may have been some pullback, but it's taken us to a new trajectory. And we've been able to dive into some of these interesting innovations around India Stack and potential directions we can all go. But we also recognize that tremendous challenges still remain, and we're very early in this journey. And hopefully this panel creates the framework and platform for the rest of the day's discussions. Great. Thank you, everybody.